Today's video is going to challenge some long-held beliefs about investing because, frankly, the rules we all grew up with, they're not working anymore. We're no longer in a market shaped by rational cycles or predictable policy. We're in a market shaped by chaos. And trying to force old models into this new environment? That's like trying to navigate a thunderstorm with a roadmap. Let me explain. Over the past few years, we've been witnessing a fundamental breakdown in the global investing playbook. The classic approach, analyzing economic cycles, studying fundamentals, betting on mean reversion, has been steadily losing its power. It's not just about rate hikes or earnings anymore. It's about politics, populism, and power struggles. And these factors are not just influencing markets, they're driving them. Just look at the whiplash we've seen lately. Markets swinging wildly on news of a trade delay, a regulatory crackdown, a surprise tariff. Volatility is now often policy-induced rather than data-driven. We're in a new era, and it doesn't care about your DCF model or 5-year earnings growth projection. Why? Because the world itself is changing faster than markets can keep up. For decades, we relied on a handful of economic superpowers to provide stability and leadership. But that era of confidence is over. We're seeing fractures in the very institutions that used to anchor investor trust. Central banks, courts, even entire governments. The erosion of these institutional pillars is especially clear in advanced economies. Places we once considered the gold standard for rule of law and governance are now riddled with gridlock, partisanship, and sudden executive overreach. When trust in those institutions falters, the idea of predictable policy outcomes disappears. And when that disappears, long-term investment becomes a guessing game. Now here's the critical point. This isn't a temporary deviation from the norm. This is the new norm. Markets today are not guided by fundamentals alone. They are being jerked around by short-term shocks, personality-driven politics, and sudden policy swings. Tariff announcements, regulatory crackdowns, trade threats, leadership changes. A tweet can wipe out a rally. A speech can spark a flash crash. And this goes beyond just noise. This is a structural shift. We've entered an age where every signal is distorted. What used to be reliable leading indicators, like interest rate curves, labor market data, or business investment trends, are now constantly overshadowed by geopolitical narratives and media cycles. It's no longer just about where rates are headed. It's about whether a central bank governor will be overruled, whether a court will block a stimulus package, whether a key trade relationship will be severed overnight. And this dynamic is even more intense in emerging markets, where political risk and institutional volatility were already part of the investment equation. Now, similar instability is creeping into developed markets too, making risk modeling harder than ever. So what can investors do? Let me offer 3 ideas. First, embrace the chaos. Don't fight it. Understand that we're in an environment where things won't make sense all the time, and that's okay. Sometimes the right strategy is not to try and rationalize every price movement, but to accept that we're living in an age of political weather, not economic seasons. Second, adapt your strategy to be faster and more flexible. Long-term conviction is great, but in this environment, nimbleness is survival. That means being tactical, watching positioning, and avoiding overexposure to crowded trades. It means shortening your time horizon, not to speculate, but to protect. Third, become a student of politics, not just economics. If you want to survive in this market, you need to understand the political landscape, the regulatory risks, and the decision-making structures behind the headlines. Markets are reacting to political institutions now more than macro indicators. And finally, a mindset shift. Stop assuming that things will normalize. That assumption itself is dangerous. This isn't just a phase. The breakdown of institutional trust, the rise of nationalism, the war on globalization, these aren't noise. They are part of a broader transformation of the global order. So yes, this sounds chaotic, and it is. But there's a way to navigate through it. You don't have to panic. You just have to evolve. Forget investing the old way. Stop waiting for clarity. Stop waiting for the Fed to stabilize things, or for volatility to subside, or for macro signals to align. This environment demands action, not patience. Focus on risk management. Focus on adaptability. Focus on opportunity where others only see fear. Because here's the truth, chaos isn't going away. It's becoming the operating system. And those who learn to operate in chaos, they're going to be the ones who thrive. Thanks for watching. If this gave you a new perspective, drop a comment below, smash that like button, and subscribe for more deep dives on the intersection of markets, policy, and power. We've got more episodes coming up that dig into how to trade volatility, spot political catalysts, and build a portfolio for a post-stability world. Stay sharp, stay skeptical, and most of all, stay adaptive. See you in the next one.